Hi everyone, welcome back to Level Up with Dawn. Today we're going to be doing something quite exciting. Well, exciting at least for me. I want to start a new segment for you all, and I was thinking of calling it This or That Thursdays. So, This or That Thursdays will be a video on two similar products that I will go through, teach you about so that you can make a decision on which one better fits in your life. So, to start it off, I thought a really good comparison that we could do is life insurance and funeral cover. I'm sure all of you have seen the numerous ads, and you can probably name the most famous companies that provide these products. Um, but life insurance and funeral cover, a lot of the time, are mistaken as really similar things. But I did want to have this video out for you guys so that you can better assess if they really are similar in terms of taking care of the needs that you have in your life. So let's begin with definitions. Life insurance is a long-term insurance, and long-term in the sense that that product takes care of long-term needs of the family that you leave behind. And funeral cover is more for the short-term needs that need to be taken care of in the case of a person's death. I think it is important for me to note that funeral cover does not serve as a replacement for life cover. However, life cover can include the add-ons you need, such as funeral cover, to take care of those short-term needs. So one of the reasons why people would gravitate towards funeral cover more is because and you'll see this in the marketing as well, the money gets paid out very quickly because the expenses that need to be covered happen very quickly when a death happens. So that is beneficial in that case because obviously we don't see these things coming, and so to have that lump sum within 48 hours is fantastic. Life insurance, on the other side, the you can get your lump sum or you can get your payment out in a fairly short amount of time, provided that it is straightforward. But if you do have a complicated estate or complicated structures in the way that your estate has been constructed and put together, then it could take a while. So then that serves as a disadvantage as to why some people may be deterred from getting life insurance as opposed to funeral cover. So let's quickly touch on what funeral cover covers versus what life insurance covers. So funeral cover, as previously mentioned, it's short-term in nature, so it will cover your funeral expenses, maybe your casket, the transportation of the body, flowers, those sort of things. Life insurance, on the other hand, gets a bit complicated because you can tailor fit it to what your needs are. A lot of the comprehensive life insurances will cover your debts in your death so that your family doesn't need to worry about that. It can also actually step into effect when you're alive. So that could be if you have an illness that doesn't allow you to work, if you have any if you become disabled, dread diseases, and those are diseases that really hamper you from working at the same level that you used to be able to support your family. You could put in an education structure within that to make sure that your children's uh, fees are covered. You could include funeral cover as well, right? And so then this particular piece of the lump sum is uh, towards funeral costs, and so that could be expedited in terms of paying out that lump sum to take care of those short-term expenses. Now, in terms of payouts or in terms of the limit of what you could be covered, funeral cover, from the research that I've done, goes mostly up to 50,000 Rand to take care of the short term expenses, right? However, life insurance, you can realistically go as high as your budget allows. So, because you will be paying that monthly premium for the rest of your life, essentially, it depending on what your budget is for that monthly premium, that affects how much of cover you could get. And so, because you can get substantially, and I mean, you could get like 100 times more cover with life insurance than with funeral cover. So then that means rather than your family being taken care of in terms of giving you a dignified burial, they can also live a fairly similar lifestyle to the one they did when you were still alive because of the additional money that they will receive from your policy. So with funeral cover, it gets paid out in a lump sum, and that's just the standard method. That lump sum is decided when you take out that policy. In terms of life insurance, you could do a lump sum structure where they um, they just consolidate your estate, pay off your debts and everything else that needs to be paid off, and then the remaining amount gets paid in a lump sum to the beneficiaries, and they can do with it as they will. Another structure you could have could be where you get monthly payments going forward for as long as that money lasts. One thing that would help to make it last longer is if, but it's like, I don't want to complicate things for you guys, but think about it this way. For this whole time period, you have been paying premiums and then you pass away. And now your life insurance comes into effect, and then they know that this is the sum that you were insured for. They pay off all your debts and obligations, and then you're left with, let's say, 100 Rand, right? So now this 100 Rand can be paid to you, and then now you can do with what you want with that 100 Rand. Or you could get a 10 Rand per month, or a 5 Rand per month for as long as that 100 Rand lasts, right? But what essentially happens is that 100 Rand which is left after paying off all the obligations, that gets put into another investment vehicle, that where its structure is allowing its structure is such that it pays off a monthly amount. So think about it in terms of your a fixed deposit, right? And you have fixed deposits where you put in a lump sum, and then every month you earn interest, right? And then that interest, you can either say pay it out to me in a separate bank account, or put it back into that same fixed deposit and allow it to grow, right? So what is essentially happening is this 100 Rand is in a fixed deposit, and I mean, this is not accurate in terms of the actual products I'm talking about, but the concept is what I'm trying to put across. They put that 100 Rand into a fixed deposit, and now that's earning interest because it's invested in something, right? And then that 5 Rand a month that it earns gets paid to you as a monthly lump sum, right? So, and then also, of course, you can combine the two. You could have a percentage of it that comes off as a lump sum to help take care of immediate costs. Maybe because of this person being deceased, you need to downsize, or you need lawyers, or whatever the case may be. And then after that, then it's an annuity income where you're getting a monthly payment for the foreseeable future for as long as those funds last. So now let's talk about who gets covered and who gets paid in these policies. So with funeral cover, you can add your family members, you can add yourself, you could add extended family to that funeral cover. So if essentially people who you know you will have to take that responsibility to give them a dignified burial, they can be added to your funeral cover. And then obviously um that will change the price of your policy and how much you're paying every month. um, and who the person who receives the lump sum when it's claimed is nominated at the beginning, and it's normally one person, probably the person who took out that policy. And in the case where the person who took out the policy is the person who's deceased, then they have a designated person who has been nominated prior to that point. For life insurance, the person who is covered is the person who takes out the policy. Sometimes you may include your spouse in that. And then in terms of being paid out, you can nominate beneficiaries for that. And it's up to you. You can decide this person gets 5%, that person gets 50, this person gets 25. It's at your discretion. And then that will be enacted when the time is right. And finally, let's talk about how the premiums for these products are calculated. So for funeral cover, it depends on the number of people on your policy. So remember, I was talking about you can add extended family if you wanted, and then also there are set uh, products, you could say, where this specific type of cover includes XYZ, and this one includes ABC. So it depends on that, and then it depends on how many people you're putting on the choice that you made. And then in terms of life insurance, the calculation of the premiums are a bit more complicated because they take into account your age, they take into account your lifestyle, and they also take into account the gender, the job that you do, and then this all helps to compile your risk profile. And then based on your risk profile, then they can decide how how much they need you to pay in order to give you the money that you need when you pass away. So in this situation, sometimes a medical exam may be needed. More often than not, they do need to do a medical exam, just that they have records of your bodily stats. And because what the risk profile aims to do is to essentially predict when you are going to die. It is what it is, right? So your job could affect how soon you die, maybe stress levels, maybe it's a physical job, maybe it's mining, which is, you know, it's maybe it's a dangerous job, right? Then also your lifestyle. Do you eat a lot? Do you not? And there's well, not even do you eat a lot, like do you eat healthy food? Do you not? And so for those of you who have those programs like Vitality, where they know when you go to the gym, they know what you buy for your groceries, they, so it's like that kind of information helps them to better assess how risky or how soon they expect you to die. Because if they see you going to the gym every day and they see you buying vegetables at the store, and they obviously, like, they trying to incentivize that, and they're giving you rewards and paying you back cashbacks and all those types of things. But that data is what they're actually looking for, to better be able to predict when you're going to die. Because the situation that they're in is, here is Dawn. She is a 28-year-old female, and she just came and asked for 1 million rand life cover, right? Life insurance. And so now they need to be able to say, okay, realistically, we expect Dawn to die within the next 50 years. So we have 50 years to collect premiums that at least value 1 million rand, right? Because they need to pay me 1 million rand they need to pay my family 1 million rand when I pass away. But let's say And so it's important because they don't want to be in a situation where they calculated that it would take me 50 years, it would take them 50 years before they would need to pay my family, but then they end up only having to pay me, they end up having to pay in 5 years, right? So now they got 1/10 of the premiums, but they're still obligated to the full lump sum, right? So their data around your lifestyle, the job that you do, and like any risks that could affect the length of your life, that is important for them in order to calculate what you'll be paying. And that's why you will see in a lot of ads when it comes to life insurance, they'll say, it will never get cheaper than this. Because literally, as you get older, it's going to be more expensive to take out life insurance. Because it's not that 50,000 Rand lump sum, whether you're 20, whether you're 50, whether you're 70, there's a bit more of a science to it. So now, which one do you choose? I guess it depends on what you think you will need or what do you think your family will need. Um, it's it's hard to decide, and I mean, it would be easy for me to decide and say, oh, I want life insurance because I can include funeral cover in it. I can have, income protection. My son's school fees can be paid for and the debts as well. But then what if my budget doesn't allow? What if I can't afford to be paying upwards of 500 Rand a month towards life insurance, right? Because these are you're paying this lump sum every month and you're seeing this money go away, but you're not necessarily seeing the benefit it adds. The benefit literally you will never see it. It's the design of the product, right? But then you have life to live and you have bills to pay and you have things that you need to be able to afford. So it's really difficult to decide, do I want to at least have the short term aspects of things covered, or do I have the budget? Do I have the leeway to think more long term in how I want my family to be covered? But I do hope that the information that I've provided today has helped you maybe inch you further to making that decision. I'm not going to sway you in any way because it honestly is really subjective. But if you have any questions, please put them down below in the comments. I'd be happy to answer them to the capacity that I can. And also, if you have any other similar products that you'd like me to compare, then I'm so happy to do so. And I think if you guys want this, then we can make this a weekly thing with different products every week so that we are all better educated and we can better financially plan for ourselves, right? I mean, that's the goal. So thank you for watching. If you enjoyed this video, please don't forget to give it a like and don't forget to subscribe if you want more content like this, and I will see you in the next one. Bye.